Ira Epstein of Linn Associates with your financial market wrap-up, and it is late. It is Sunday, and this is the 9th of August, 2020. I normally do these on Friday afternoon, but my wife had a very big birthday, and it took both Friday and Saturday, as you can imagine. How many of you are in my shoes? Got to do what your spouse needs, and on a big birthday, you do it. And it is summer. I take no time off, so I had to do this. All right, so let's talk. As we are, the big news of the weekend is President Trump, again, followed through with his promises. He said he would use executive action if they didn't reach agreement with the Democrats on COVID-19 packages, and he's done what he said. Now, if you watch the morning news, everybody's got their opinion as to is this right, wrong. Even if it's challenged in court, it'll probably drag on past the election. So, what it does, I think, is force the two parties to get back into a room and strike a deal without one having power over the other. The president's exercised his actions. People are getting $400, not $600. The $1,200, as I understand the pay, that's not out there. So maybe there's room to get a compromise. I don't know, nor do I really care that much. Why? Because the market... Good weekend. Ira Epstein. Good weekend, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Sunday, the 9th of August, 2020. Highly unusual. I normally get these done either at the close of business Friday night or I do them first thing Saturday morning. But my wife, a big birthday this year. Of course, she's got a 2-day party, family, friends, you know, you can imagine. And yes, I want, before anybody says anything, lots of COVID practicing, tables spaced out outside, masks worn, so I don't want to hear about that. That doesn't mean that it's that things can't spread around, but we did everything, and at some point you do what you got to do, but definite, and that was a protocol. Everybody came in, we gave masks to if they didn't have them, and we made them wear them when they weren't eating. So take it from there. The news of the weekend, and as you can see, these are the closes, but they are certainly not the highs and lows, and that's because it's Sunday and the board's already cleared on me. But the news of the weekend is certainly the president and going ahead with the executive actions. So what's the next step of all this? Does it force Democrats and Republicans back into a room to renegotiate things and get more done, or does it stay like this going into the election? I frankly don't know. Do we all care? We certainly do. Those that need help might not be getting the amount of help that they need. On the other hand, you got to get the parties together. The president can only do so much. Democrats are saying what they want. Republicans are saying what they want. And they didn't come in the middle. Both sides have to give something. We'll see if this does it. In the meantime, you can't argue that here's a market that on a monthly basis, not a daily or a weekly, a monthly basis is at a new all-time high. So that's pretty important. Obviously, this correction from March goes unabated on a monthly chart straight up. These are highly unusual moves. This was an unusual move down, and now you've got another one to the upside. When you go to the weekly chart, you see that we're within striking distance of the all-time high close. This is a close-only chart, and here we are all of what? Roughly 37 points away from hitting that all-time high close. So will we test it? Easily could. We'll see what the market looks at when it opens tonight. Tonight's going to be an interesting opening. Is the market going to consider the market got something that it needed and it moves on? Is this considered bad news? Marketplace is going to tell us. When we look at the weekly bar, we can see that we've got a top here at 3,400 roughly. The market falls down. It's coming back up. Will it challenge that? In terms of the swing line study on the chart, the trend is still up. You have higher lows, you have higher highs. What would break the pattern is taking out 3192. Barring that, the trend as defined by the swing line, higher highs, higher lows, is bullish. The market is trading over the 18-week average of closes, and we had a bullish crossover here. When the market, if you look at the 18-week, and this was the week, by the way, of July 17th, you were under the 100-day, and then you closed over it, and that often leads to new highs coming in the market. there's you're making the new high for the move. Now, I don't know if it'll make a new high for the high. That's not the goal of that average. The goal is it'll make a new high on that move, and it certainly did. It backed off a bit when the crossover happened. You can see that. There it is, and then the next week you fell back. So I was going, well, I think it's going to take that out, and it did. So now we see what the game's going to be. When we look at where the resistance comes in, it comes in at the 33.81 level, which is the upper Bollinger Band. And again, the first challenge of a Bollinger Band, downside or upside, is often where pros take money off the table. After that, different things can start occurring. But the first challenge is what I look at. If that's hit, that's just what I look for. We'll see on the weekly chart if then we stall out or not. When we take a look on the weekly chart at the slow stochastics, I view slow stochastics on a weekly chart as either pointing up, down, or sideways. This is still pointing up. So in summation, we have a trend that is up on the swing line. The bias is up since you're over the 18-week average of closes. The target is the 33.81 level, and take out 31.92 and you go into a stall. In the NASDAQ, the trend is still up. The slow stochastic pointing still. That sideways action over 80 is still bullish. You've got the higher lows, the higher highs. Target 11,402. Notice on this whole rally, not once have we hit the upper Bollinger Band. That's unusual. You had peaked out against it here going into March and came down hard. Now the question is, can it get up there, or is it going to keep fading away from it? I don't know, but it's something I keep watching, so I look at some other tools as to where the pros might be stepping in and out. You have the same situation in the Dow, obviously. We do have the higher lows, higher highs. What had been a resistance point, the 100-week average of closes, became, after you got over it, a bit of a support point. You can see how many times it started falling back to it. Will the market make a run towards the 27,755 level for the resistance point? That's interesting to figure out. And what did momentum do? It had been sideways. It wasn't over 80. Now it's moving up again. So everything's bullish there. The question is, does the market, and if it takes out 25,881, go into a stall period? In the Russell, will it also make a run? So we are looking at these markets as strong as they've been on a weekly chart. We come here in the Dow, we come back to the NASDAQ and the S&P. None have been able to hit the upper Bollinger Band since the break in March began. The target is that number in all four, and it loses that target if it takes out that last break low. In the T-bond market, you can see that there. In the T-bond market, we now broke down under this. Now, I've been telling you, I think this is called a pipe. And that's, ideally, it would be going more sideways, but it's still there. And the market is playing in the quadrant, if you will, of using the 100-week average of closes and the resistance of the upper Bollinger Band. It also has a divergence. Momentum is turning down. So while the bias is up because you're over the 18-week average, you've peaked out here and you're no longer in the pattern that we had of higher lows and a higher high. You've gone into a stall pattern temporarily. This is more in the early stages of a pipe in the 10-year note, because look at how tight you're going. You've narrowed in these numbers all the way. Momentum is still up here. The trend is up. So you've got the trend up in terms of higher lows, higher highs, unlike the T-bonds. You're staying in the top quadrant, just like them, and you're hitting the upper Bollinger Band and not making the lower low, breaking that pattern. This market is still well supported as I see it, and the question becomes one, is the market eventually going to move to the upside? I don't know if what the president did, because now you're not throwing that $3 trillion that the Democrats wanted into the COVID relief. Is the market going to say, we don't have to run to the upside because we don't have that much money flooding the market? There's so many ways to look at what went over the weekend. In the dollar index, well, you had 2 weeks in a row where you had closed under the Bollinger Band. The odds of staying under a Bollinger Band only 5% of the time. The important thing is each of these weeks, the market had hit that. If you keep staying on that, it is a sign of bearishness. That means the market is just working its way down. Momentum is still bearish. The bias is down. You don't have a downtrend as defined by the swing line. You have a higher high, lower low pattern, but we can certainly see this market went into a cave-in pattern, as I like to call it. In the Eurocurrency, it's the flip-flop of the dollar. You had 2 weeks over, and now you've pulled under. It's back in sync with itself. Unlike the dollar index, this is quite bullish. It's had the higher lows, higher highs. Notice that this market just starts locking in and trading on the Bollinger Band. That's a very bullish sign. When a market does that and doesn't back away, first thing, it's not giving traders an opportunity to buy a lower low in the market. Second, it just keeps riding that resistance point where the uneducated in this say, oh, it's overbought, it's got to correct big. The Canadian dollar, different. The market got up for the first time to the upper Bollinger Band and smashed down, even closed lower on the week. So while the trend is up, we're starting to see that the combination, and I talk about this all the time to you, the combination of the 100-week average and the upper Bollinger Band, that was resistance. You had not hit it this week of July 24th. You missed it by 2 points. You got up to it. No, not there. Now you did, and you threw yourself right back. So that combination, very much in play. Not a trend changer. The trend is still higher lows, higher highs, momentum still pointing higher. Japanese yen, it's just saying staying over the Bollinger Bands too much. Why? The algorithm of the Bollinger Band adjusts itself to both volatility price ranges. And the market is geared, at least the study is geared to keep the market trading within it 95% of the time. You need it to break out of it because you get these narrow ranges and you want it to break out. These aren't narrow ranges. This is more of a trading pattern as I see it. So that's a resistance point. The support point's at 93.34, let's call it. Momentum is pointing down, so you have divergence in the chart. Higher lows, higher highs, bias up, but momentum pointing to the downside. Bitcoin, probably a little bit ahead of itself right here on the weekly chart. But remember, this is a market that in December was around, what, $4,500? It's tripled in price. Is it going higher? Well, this chart says probably. The market still has momentum sideways to higher. You've got the higher lows, higher highs. What are the odds of staying over the upper Bollinger Band? Only 5% of the time. So to see a pullback in it makes all the sense, but I think the bulls are in control of this market. Then we get on the weekly chart to the differential between the Brent and the WTI crude. We saw that down here in the 50 level, way crazy, too low, but that was when you saw crude oil prices do what? They went to a negative near $40 a barrel. So we're correcting it. Could we get to a differential of 372? We certainly could. That's just a bump in a market that has been staying under that number. I cannot say that the trend is down. I can say the bias is down, but you can see here just yourself. You had been making this lower low right here, and now you've got the higher high. Don't know what to do with that. In the trend of Brent by itself, it's up. You have a market that's got higher lows, higher highs. Take out 41.38, you break that pattern. Then the differential might swing down, at least the price might swing down, I should say that, to $37 in the Brent for the support level. If the market keeps rallying, the resistance is 50.75, the upper Bollinger Band. WTI crude, still in the bullish pattern too, just not as gaining on price as we're seeing in the Brent. Higher lows, higher highs. Take out 38.72, and I think you leave this uptrend that we've had, and obviously you can see that negative price, how the market came all the way back. Might be a once-in-a-lifetime event that you witnessed there. Rebob gasoline is not trending. It has a pattern of a higher high, lower low. Momentum, when we reopen on Sunday night, could actually turn down in this market. Be a bit cautious here. You could be getting a move back to the 105.60, 106 level for support zone if you break down. So that's what I'm seeing there. You know, if you're like me, you just, let's take this weekend. You start questioning, what should I do on a Sunday night? And the reason for it is, what did the president do? How's it going to look at things? What do you do with that? Well, that's where I try to come in. Starting Monday morning at about 5:40 in the morning, I put out a tape for my paid subscribers. In it, I'm going to cover 40 futures charts in great detail. In those charts, and they look different, they'll have the black background with more studies on them, I start you off with What did Asia do overnight? And it's 5:40 in the morning. What did Europe do? How are they looking at what the president's actions were? And then I'm going to give you points of entry, exit, profit objectives. I'm going to be so specific. Doesn't mean I'm going to be so right. I wish I walked on water. I don't. You'll see, though, what I do. There's a lot of discipline in the trades and a lot of money management. That's what I try to work on. I'm going to cover these markets in exactly the same way each time. The video is about 20 minutes long, sometimes a little longer because I teach in it. But you're able to use a scroll bar that we put on our website, and let's assume it was just metals you wanted to go to. As you pull the bar, it's going to light up and say metals. You can get right to the areas you want. It also comes out on your smartphone. It won't have, unfortunately, that part you just got to pull with it because that's unique to our website. The cost, are you a Starbucks drinker? What do you pay for your large drink? It's pretty close to $7.95. You're through with it in 15 minutes, right? This is for 30 days. You get to see, does this make sense? Is this something I want to wake up to each day? Let me tell you about my career. I subscribed, and I can't tell you the different services when I began, and I couldn't wait to get the mail. And they would use special mail, so I'd have things by Monday morning and pore over what these analysts were doing because I wanted certain ones that I really believed in. I wanted to see what they were doing. I want to be that to you. And unlike waiting for the mail, these come out. Now, I admit, this is a Sunday that I'm putting out this update. You can count on your hand when I don't do one on a Friday night or a Saturday. Okay, that's just not how it works. Big event this weekend. So how do you find out more? Go to our website under the word research, and if you're a SPDR ETF trader, we also have a program for that, and we even combine the two with our combo. I'm Ira. Thanks for watching. Going to be an interesting Monday with all that's going on. I will see you then.